Joining us right now is James Wang, analyst at ARK Invest, based in New York, sub-advisors of the Emerge Canada ARK ETFs. James, it's a pleasure to have a chance to talk to you today.
Great to talk to you here.
Your firm sub-advises, I know you have your own line of ETFs in the U.S.,
yes.
But in particular, you sub-advise on the Emerge Canada ARK ETFs. You were just up, you presented on the opportunity in artificial intelligence.
Yeah.
So let's talk about that. What do you see as the opportunity in artificial intelligence? I think at this point, investors look at the cycle that we've been in since 2008, something like an endlessly rising market with a few interruptions. But we're late in the cycle. There's very, substantially higher valuations relative. And maybe some investors are concerned about a repeat of the tech wreck.
Sure.
But times are very different now. I mean, the fundamentals have changed. The earnings picture outlook is very different. It's more robust. It's real. It's not, it's not pie in the sky or unicorn. There obviously is unicorns out there, but that's not what ARK is investing in. We've had a lot of time to digest analysis from your firm and from Kathy Wood. So it's a pleasure to get a chance to ask you, because we listened to, for example, the podcast that your firm did with Elon Musk.
Sure.
There were some extraordinary revelations in that podcast. So maybe we can talk about your outlook for an opportunity like Tesla.
Yeah, sure. We've probably done more work on Tesla than any other investment firm out there, kind of from a tech angle. If you read the sell-side reports or the hedge funds, they're all focused on how many vehicles are they going to make or sell this quarter, what are their gross margins going to be this quarter. And yeah, that's important. I think, but the more important picture is assuming that they are able to manage their cash flows in the next couple of quarters, and that's been a concern forever, basically. And every quarter they basically demonstrate again that they're able to do that. The real question is, what is the ultimate market opportunity for Tesla, and what is their competitive kind of position relative to everyone else? There are basically, in our view, two outcomes for Tesla. One is that they become a very competent EV, electric vehicle manufacturer, something like similar to Apple. Right? Apple came out with the first smartphone with iPhone 2007. They didn't end up capturing 80% of the market share for smartphones. They ended up with something like 15%. But Apple is, basically, depending on the day you look, the most valuable company on earth right now, along with Amazon and Microsoft. So you do not have to have all the market share to have the most economic value. Our view on Tesla is they will probably end up with Apple-like, maybe a little bit better market shares as the world transitions to EVs.
Right.
The transition is absolutely certain. It's going to happen for environmental reasons, but more importantly, for cost reasons. In about 2 years' time, 2 or 3 years' time, the cost of an EV is going to be lower, all inclusive, than a gasoline-based car. And once that happens, consumers basically vote with their wallets. They're going to switch to EVs. And once you switch to EVs, who has the best EV? That equation is completely reset. It's no longer, are you a 100-year-old automotive manufacturing company? It's what are consumers looking for today?
Right.
And we're seeing them make incredibly new trade-offs today. The first batch of Teslas came out were notorious for having panel gaps and poor seating and little bits of details that weren't right. And the traditional manufacturers looked at Tesla and said, look at these guys, they don't know how to make cars. Consumers they're not going to pick a manufacturer like this. They're going to buy our Aldis and their BMWs. It totally didn't happen that way. Tesla worked through those issues, and consumers were willing to jump through hoops just so they can use what the benefits that the Tesla provides, which A is electric as the form of propulsion, and two, is it's just incredibly fun to drive, and it's driven by software. It's a complete different product experience. My dad just had his delivered, and he just texts me all day raving about it. We haven't seen genuine enthusiasm from a consumer about an electronic product since the iPhone, I would say. We've had all these other things that's been okay, but no one, there hasn't been a frenzy, genuine customers passionate about the product since the Model 3 came out. That is, I think, the fact that Tesla was able to replicate the kind of passion and customer loyalty that only Apple thus far has commanded is an incredible achievement. No one in all of Silicon Valley has able to wield that. That's just the baseline. The more interesting outcome for us is that Tesla has basically changed its business plan, and they want to get to a point where all the Teslas coming out are self-driving. They laid the groundwork for this by including a suite of cameras and radar sensors in each Tesla, and their own custom-designed self-driving chip inside the compartment of the car. So they fully vertically integrated everything from the sensor suite to the software to even the silicon to basically push kind of the speed, the timeline that you can get to self-driving.
Right.
Every other OEM, whether it's GM or Ford, have invested in startups, and they have basically rolled out no production cars with this capability. The key thing about self-driving is that it's an AI problem, and AI problems today are solved. Those battles are basically won or lost over the quantity and quality of your training data. These are programs that are not written by humans. These are programs trained by examples generated in the wild.
Right.
And Tesla has more than 300x data and is growing than all the rest of them combined. It's the largest
to work from. Yeah.
Yeah, it is the largest kind of delta in capability that I've seen for anything. It's like Google Search versus everyone else. Google Search keeps getting better because everyone uses it, and it just snowballs to its benefit. And Tesla basically has the same effect. To learn how to drive in a weird rural road, maybe there's a bunch of cows crossing or there's a weird sign. You have to have observed that instance in the past, and then put it in your database to train your algorithms with. Only Tesla has seen this. You watch the Tesla global heat map of all the cars deployed as a fleet. You can basically see the population of, call it, early technology adopters all over Europe, US, and bits of Australia. They're collecting data and they have full visibility over this fleet today on a second-by-second basis.
Of course, because they're connected to all the vehicles.
They are connected vehicles.
Yeah.
If you ask GM and Toyota, where are your cars? They cannot even answer that question. They can't even see it. They're not even connected. They basically haven't even, like Tesla has seen things that these other car manufacturers are not even going to observe for another 3 to 5 years. That's the gap we're talking about.
It's extremely exciting. I think I recall just from listening to the interview, there was a lot of controversy at the time of the hiccup in the Model 3 production.
Yeah.
There was also, which was interesting because it was basically the argument that it wasn't a problem with the production line. It was a problem of time.
Yeah.
That the timeline got pushed back 6 months. Not the problem. The problem went away after that.
Yes.
And they were able to meet their targets. But also the discussion around improvements or enhancements that are being made in the battery development. That batteries will last longer, so the driving range will extend.
People talk about Tesla. The bears who talk about Tesla say, well, Tesla has no intellectual property. Its batteries are commodities, and it doesn't even know how to make cars, and it's going to be basically swamped by competition. What in the beginning was kind of a somewhat reasonable argument. Then the traditional automakers started coming out with their own electric vehicles, and we got to see what kind of performance they were able to extract.
Right.
When you just stack the charts very simply on the size of the battery and how many miles you get, basically how many miles you get for each kilowatt hour of battery, every existing car manufacturer is behind Tesla by 20 to 30%. They haven't even reached the Tesla Model 3 level of performance for battery range for the vehicles. So now the question is really back to them. So if Tesla is a commodity, if their batteries have no proprietary technologies, why don't you just buy them out of the supply chain in Shenzhen? Why aren't you as good as Tesla? I mean, the answer is clearly the other way around.
Well, there's obviously this technology and enhancement,
in them, and you cannot replicate them.
So now, if the SpaceX rocket landing itself is any testament to the work that Musk's companies have done, surrounding Tesla is companies that are working in conjunction with Tesla and its developments. Nvidia, for one, in terms of the technology, the chip technology that's driving Tesla. What are your thoughts on Nvidia? A lot of people think that Nvidia is gaming chips, but it's in fact driverless cars.
It's driverless cars, it's artificial intelligence. Nvidia was originally the supplier to Tesla for self-driving capabilities until Tesla built their own chip. But when people heard that news, Tesla is kicking out Nvidia and using their own chips, they thought it was bad news. And in a limited sense, yes, it's bad news. Nvidia, lost one customer. But in a wider sense, it's actually very good news.
Yeah.
And the reason is Tesla basically said, Nvidia, you're not even fast enough and aggressive enough for us and our needs. We need to build our own. So we're going to build, a self-driving computer that is basically 2 years. That's basically your next generation, but we're going to build it today.
Yeah.
And they rolled it out. It's coming out of the factories every day. What that will do, what that is already doing, is basically create a forcing function for every other automotive manufacturer out there, saying, hey, if you don't catch up, I'm absolutely going to eclipse you. It's like, Apple is using a 64-bit chip and everyone is using a 32-bit chip. That was true for one whole generation, and everybody scrambled because they were so behind. So Tesla, by pushing the boundaries that quickly, is basically forcing everyone else to invest aggressively and basically even pull NVIDIA's roadmap ahead. They basically made everyone else NVIDIA's customers, because NVIDIA is the only manufacturer today who can provide chips of that kind of performance that you can buy.
Right.
Whether it's Toyota or Volvo, whoever, they're basically flocking to the arms of NVIDIA as a result of this kind of move.
Are there any other? I know these Tesla is a big holding for ARK. You guys have done an enormous amount of work and research around Tesla and all of the ancillary opportunities around it. But which of the ETFs, seeing as we've spoken in depth about Tesla, which of the ETFs in the Emerge ARK lineup, would that be the Emerge ARK AI Big Data ETF?
For NVIDIA, that would be. For Tesla, it's kind of our autonomous and robotics fund.
EAUT.
Yeah, EAUT, kind of for autonomy. Another story that I think is great, we also have a fintech-focused ETF, EATF. This has been a very successful product in Japan through our friends at Nikko, but we've also brought it to the US and Canada. And we've done an incredible amount of very original work here. One very simple angle kind of that advisors can take is kind of look at a company like Square. When Square IPO'd, people thought, these are cute little terminals for SMBs to kind of roll out credit card support. But that company has basically reinvented itself 2 times over during the period that it became public. Through its Cash App, it is now acquiring customers and becoming basically a mobile a bank in your wallet.
Right.
I think it acquired a bank, so that actually has the mechanism to provide.
It actually has an infrastructure now.
Yeah, and the kind of regulatory support. So a traditional bank spent many decades building out all these branches. It costs them on the average about $2,000 to acquire one new customer. Square, through its mobile wallet, basically piggybacking off the Apple Store in your phone, acquire new customers for $20. So here we have a 100x differential. We're always looking for these 10, 100x differentials in business competitiveness. And Square is basically surreptitiously becoming the bank in your wallet. And most big banks have barely woken up to this threat. They still think that by their revenue, by their scale, by their employee base, that they have some kind of durable moat around their businesses. They don't. The rug is being pulled underneath, basically from under their feet. When we track the adoption of Square for different U.S. states, the interior is the part where it's really, really picking up Cash App, because those are the people who are most underserved by traditional banks. I think it's one of the most actually underappreciated disruption stories out there.
Fascinating. James, I know there's plenty of food for thought here. We could probably talk for quite a long time, hours probably. Thank you so much for your time. It's been fascinating and exciting to listen to what you have to say.
Thank you so much.